All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. New tariffs from the U.S. to China and from China back to the U.S. Have the market sitting in a bloodbath here today. S&P down 72 points here at the moment. He's a little bit off of its lows, but only like 8 points off of its lows. We've come all the way down here towards this 2,800 level. If I back things out to a 1-hour chart, you kind of see what this looks like. This hasn't been seen in a while, or these levels haven't been seen in quite some time. We come back to a 4-hour chart, and now we're talking about, this 2,800 level. The last time we had a significant pullback in the market back in March, this 2,800 level is where the market came down to. This is kind of where I expect to see some temporary support. But when we see a market that has new catalysts like this one does, old supports don't always hold. So it's not something where I'm looking to say, well, okay, this level's got to hold because of this action back here. Yep, this action back here was high volume. This action back here was off of these levels. But also the tone and the mode of the Fed was different then. The tone and the mode of trade talks were different then here as well. I would also argue with the earnings season was different. Earnings expectations were different, as earnings expectations have definitely taken a hit here. So a lot of change in the market from what this dip was, even though the levels are the same. There's just a very different tone to the markets overall. Been watching here today, kind of looking and going, okay, is there going to be a dip buy opportunity? We haven't seen any sort of high volume bottom come in here today like we did on Friday. It doesn't have to, we don't always get it, but we didn't get one last Monday. Volumes have been high here today, but not extraordinary, nothing, too insane given the percentage move in the market that is out there here today. But you have to kind of look at this as today is one of the first days of the year. One of the first days of the year where dip buyers are getting punished severely. They were a little bit right back here, last Monday, right? The kind of the rebound Friday and all of that, or last Tuesday. But, today, those dip buyers that kind of saw these two reversal candles, and we talked about those, and kind of, hey, we often see reversal candles followed by a big sell. And, we had those two reversal candles, dip buyers getting punished in a big way, and they've not been given a rally to jump out of, right? So, one of the first times this year where we're seeing dip buyers get punished, and that will change some of the tone, right? That'll change some of the tone. And, we've already talked about my expectations. I expect rallies to be sold more than dips bought, but, long way to go, lot to go here in the market. If you just come in and put on a simple retracement, right? And just retrace the S&P here from its lows in December. You got a long way to go. Nowhere close to retracement levels. I made the comment back here that this is not the last time we will see the market at this level. The way it hit this level back here in October, November, December, the way it hit it here in March, and, it does look destined to come back towards at least that level here in the market. But, anyway, that's what's going on. You go out there into the news and all of that. It's, a lot of opinion, a lot of speculation on what could happen. And the reality is we could see things drop significantly further from where they are now. We could also see tomorrow a gap up and a rally of 50 points, right? It would only take one small tweet for that to happen, right? So the risk factors are significant, and the volatility will remain quite high. Now, we'll have about 12 minutes till we'll go take a look at the challenge. But before that, I want to go look at the Market Vibe here with you. And let's come in here to the Trader Minute Academy here, and let's log in. Again, if you're hearing my voice and you don't have access to this, please just shoot an email off to support, and they will get you access there. But the Market Vibe today is a -7. Now, the market vibe triggered bearish on Monday of last week, right? It's not like this is a new thing. Oh, all of a sudden today now it's bearish. It triggered bearish on Monday last week, and it has remained bearish since. Today is the lowest reading that it has had all year. In fact, the last time it had this low of reading, we were back in the end of December. And so this is one of the lowest readings here. We're not quite in that oversold territory of -9, -10, but getting fairly close. Getting fairly close to it. But the metrics have all turned, to the side of the bears, and given the long divergence where we saw, the market internals in neutral mode and not really all that bullish while the market was trickling up, suggests that we could be looking at a sustained, downward period here, one that, takes a while to shake off. What's going on here with the market vibe? Well, let's just take a look at some of the mechanics of it, right? Here, let me go back to Opera here. There we go. All right, one of the functions or one of the metrics that's incorporated into the market vibe is the bullish percent index, and you can see, right here today, it's the worst day that it's had this year. The bullish percent index. Now, this is just showing how many stocks are in bullish positions versus bearish positions on their point and figure charts. So we have about 60% of the stocks out there that are in bullish positions. It means about 40% in bearish positions. What changes this signal? Well, a 6% drop turns it to a bear signal. A 6% pop turns it to a bull signal. We had a nice bull signal back here in January, end of December, early January. This is the first bear signal we're seeing come in here this year. And so, the bullish percent index, which is held up all year for the bulls, is fading, is pulling on back, and pulling on back substantially here today. Can it go a lot lower? Oh, yeah, you betcha. I mean, it could get a lot lower here, but I would be surprised if it revisits December lows, but I'm not going to put it past this market given everything else that we see. If we go out and we look at something like the advancers versus decliners, right, in the New York Stock Exchange, if you're looking for today to be a short-term bottom, this is a pretty good sign, right? We're down here where almost every stock is down today. It's the worst advanced decline ratio of the year. And, when we see an advanced decline ratio get this low, a lot of times we'll see a little bit of, reversal or snapback. But not always. You'll see times where it gets this low where, the next day is down. Yeah, the advanced decline isn't down as much, but it's still pretty ugly. But if we go and we look at the volumes, right, if we accumulate the advancing versus the declining volumes, this is what's important. You can see how bad the day is today. It's well outside the normal range, well outside, just absolute difference from any day we've seen so far this year. But if we go and we aggregate this, right, if we come in and we kind of put this on a cumulative chart where it, adds the gains, subtracts the losses, and tracks it, on that type of format, which is how the market vibe does, and tracks volumes. Take a look at the volume push down today. This is pretty massive. We don't see this very often. We've had some days like this before, where it's pushed down this much in one day, but not very often. And this is a huge move here for it. But the significance of it is it's putting it into that little bit of oversold territory, and where we can actually start talking about volumes being a little bit oversold in the short run. Now, this concept of oversold is one where, a lot of times when somebody says oversold, the first thought in our mind is, oh, buy it, right? We want to buy oversold. Well, there are a lot of methods out there that trade things lower on oversold and buy things on overbought. Okay, we can find a lot of instances where oversold does not mean buy. But in the case of some of the market metrics, oversold a lot of times, is a nice little kind of rebound point, a nice little buy point. And in the volumes, we're seeing it start to become oversold, right? We're also starting to see it become oversold in the number of stocks trading above the 7-day moving average. Now, it's not oversold to the point where we tend to see a real strong bounce. We have 89 of the S&P 500. So basically, 18%, 17.5% of the S&P 500 that's trading above the 7-day moving average. That's a really low number. But when we see some of the real troughs and dips, this number will get down to about 40 to 50 in that area, right? So it's getting there, kind of like the volumes, but just not quite there. And one thing where we're a little shy when it comes to things being oversold comes with the number of stocks trading above the 20-day moving average. We still have, 24% of the stocks in the S&P 500 trading above the 20-day moving average. This number typically will get down into that 50 to 80 level. And when we're talking about a real oversold type of position. So we do have some oversold starting to, show in a few spots, but not enough on aggregate to say, well, you know what, this market, it's hit its lows. It can't go any lower. It's going to be path of least resistance higher. We can't really say that given what the metrics look like, given how things have cycled here. We are seeing high yield names hold up, dividend names hold up, utilities hold up, AT&T hold up, Verizon hold up. So we're not seeing this kind of just absolute mass exodus of everything, no matter what. We are seeing some differentiation in what's getting sold, and the right things are getting sold. Right, tech is getting sold. Tariffs, tech, doesn't mix. So we're seeing the Alibabas down big and the Adobe's down big, and whatnot. But we're seeing some of the home builders here in the U.S., the KB Homes of the world, holding up okay. A little bit of hold up in a few of the larger cap names out there, but not enough to look and go, wow, this is super bullish, and this feels really good here. I'm just noticing we just had a big volume spike, so I'm just I don't have my news feeds up here, so bear with me for just a second. I want to see what that's about. And then here in 4 minutes, we'll go out and see what we have to adjust here with the challenge. Trump says he will meet China's premier and Russia, Putin at the G20. Okay, so at the G20 conference, U.S. President Trump says they're going to be meet. No specifics really given. All right, so, yeah, nothing. Okay, they're going to meet, so, all right. They normally do at the G20, so, yeah. Sorry, just looking at the date of the next G20. I know it's in Japan. Yeah, it's not till the end of June. So, it's not till the end of June here. So, unless I'm seeing this incorrectly, yeah, it's not till the end of June. So, yeah, for what it's worth, right? For what it's worth there. But bottom line, MarketVibe, it's still bearish. It's starting to hit oversold areas, but not in the type of way that we could say, well, bottom's absolutely in. We still see a lot of erosion out there. Things like Caterpillars and Apples and IBMs and Microns, and there's a lot of blood out there in the streets at the moment. Okay, all right. Now the challenge. Let me pull up the spreadsheet here. Here we go. Sorry, and I'm pulling it up on my other screen. Any entry triggers? When I started the video, there were none. It looks like there are none still. Some of the things that were close, right? The Raytheons and everything else, they just haven't triggered. They just have not triggered here to the downside. Most of the stuff that's getting sold is stuff that was already sitting on downward trend and no real new emerging downward trend there. We do have. Sorry about the clicking around here. We do have things like Twilio that are breaking down but did not get a confirmed bear signal. We have things like Verizon with a 3-7 crossover up but no confirmed bull signal. Chipotle Mexican Grill has some cross down action but no confirmed bear signal here on that today. So, just still have Procter & Gamble. That's the only signal on the board. So I'm in the trade right now. So let's go take a look at what's going on with it. See what we have to do. The auto exit date, 5:15. Today's 5:13, so don't have to worry about that. Stock exit level, 104.21 or 108.38. So let's take a look here. Stock prices, 105.95. So nowhere near an area where I have to take it off. Let's take a look. The option price here on Procter & Gamble, 295 is the option price here. So that's where it sits here. So we have a small gain, nothing to write home about here on Procter & Gamble. We have seen the implied volatility ratchet up. That's why you see the stock red, but the options slightly green because there has been an increase in implied volatility. Now that will come out if we see the market rally or Procter & Gamble rally and whatnot there. So I got a text this morning saying, should we double up on Procter & Gamble since it's holding up real well? And, the simple answer is that's not how that's not how I do the challenge. I'm not looking at that type of a thing and going, oh, it's green and the market's red, so let's double up. I've never been a big believer in any of that. But it's nice that it's held up, but there's nothing different in Procter & Gamble today than what it was on Friday, right? When we got the signal Friday, and the signal has held up very nicely here, at least so far. But even the stock were up 50 cents or down 50 cents, the signal remains the signal remains the same there. Okay, so no real change to make here with the challenge. I was kind of hoping we'd see some put signal come in on some of the stocks, but we haven't. We do see some major erosion in some of the names, like an Apple that we talked about this morning, Home Depot, Johnson & Johnson, Netflix, Whirlpool. We see a few more here this afternoon, but these are erosions that are similar to kind of what we saw a few weeks ago in FCX and IBM in those types of names. We still have some that are holding up pretty well that could easily trigger bullish signals if we do get some sort of semblance of a rebound. You take a look at something like a Bank of America. It's had a big pullback, so it's going to take a lot to get a 3-7 cross here. But it hasn't pushed into this kind of overly bearish territory just yet. Still isn't pretty, right? Netflix had been holding up, but kind of gave up a little bit here today. Facebook has been holding on up very well. This could be one where if we start to see some sort of switch back, could easily set a bull signal. Microsoft here as well, but they're nowhere close to doing it right here. Right. In fact, the chance of it happening tomorrow were very, very slim. It would take a few days of stabilization, here in this market. And if you think about fund managers, and there's going to be dip buyers, they're going to grab the bottom and all of that. But when are fund managers going to start buying back in? They buy back in when there's stabilization. Right, and there's no sign of stabilization right here in the market. Last week or this week. All right. Thanks for hopping on. Have yourselves a great evening. I'll be back with you here tomorrow morning. And we'll talk to you then. Take care.